Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from, of course. So, I'm very grateful for life and excited to be with you here this morning. So, welcome everyone to the Extra Speed Live. Well, I hope I'm transmitting live right now and you can hear my voice loud and clear and you can see my screen very well. If you can, please feel free to let me know in the comment section while I continue with the session. So once again, I welcome you all to yet another promising edition on the Extra Speed Live. My own name is Sharif Daramola. And for the next 1 hour, I'm going to be your host as I'm going to be taking you on a trading journey where we shall be dissecting the current market structure from a technical standpoint using simple fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of the assets on our watch list for this week. Well, since the beginning of the week, we have been monitoring four major assets, which include the US All Spot, the US Tech 100, which is popularly known as the Nasdaq. We also have the GBPUSD and the XAUUSD, which is popularly known as the gold spot. And in fact, we've been doing pretty well across the major assets. And if we look at what has been going on, the latest developments in the financial landscape, especially with the increased tension in the Middle East as regards to the Israel-Hamas situation, we can see that this event is gradually creeping in on the market as participants in the market are really, though we have a sense of direction, but it appears that there is still this level of uncertainty in the market, and as a result of this we are seeing price move in a particular direction, come back to retrace back into entry point. So we really have not seen any significant move so far except on the XAUUSD. So we are going to be looking into those details in a moment. For those who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. Well, what we simply do here as technical traders is to come together as a community where we gather here to review our existing trading positions and see how we can manage them, and of course use the information we gather on the charts to strategically position ourselves ahead of the New York session. And of course this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I do encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today. So once again, you guys are very much welcome. So with that being said, here we shall be diving right into the business, and as usual, the first thing we usually do is to check on the economic calendar. Of course, we do want to keep tabs with the fundamental perspective in the market, as this is a and these are events that has a potential of pushing price action. And of course, these fundamental factors manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact events from the economic docket that affects the assets on our watch list for the week. And for this week, based on what we are monitoring, we are going to be focusing on both the United States and the United Kingdom economic docket. So for today, Thursday, October 19th, we only have one high impact event, and that is coming in from the United States. And this is the Federal Reserve Chairman's speech, which is coming up much more later in the day. And one significant importance of this speech is that it holds considerable influence over the financial market, of course, and his remarks provides us with insight into the central bank's outlook on the economy, potential policy shifts, and interest rate changes, hereby impacting our trading decision and the market sentiment as well. Now, outside of the high impact event, I was able to include the medium impact event so that we can also use this as a yardstick to as an yardstick to anticipate what things will be looking like on the chart. Now, today, in about an hour from now, we are going to be witnessing the initial jobless claims, which is usually released by the US Department of Labor. And this figure here gives us a measure of the number of people filing first-time claims for state unemployment insurance. So a larger than expected number indicates weakness in this sector, which of course influences the strength and direction of the US economy. So generally speaking, a decreasing number should be taken as a positive or bullish signal for the US dollar. Now, if we look at the previous data for the month of September, you will see here that the data came in at 209,000, and we have economists projecting 212,000 for the month of October. So this is a sign that there's going to be a little bit of contraction, as the figure here is actually beyond the previous month's data. So we are going to be looking forward to see what the actual data is going to be like on that one. Then simultaneously, we are going to be witnessing the publication of the Fed's manufacturing survey, and this survey here serves as an indicator of the manufacturing sector's strengths, which is interrelated with the ISM manufacturing index too as well, and the index of industrial production. So generally speaking, an above the expectations reading is seen as positive for the US dollar. Now, if you look at what happened in the month of September, we had a data here at minus 13.5, and we have a general consensus projecting minus 6.6 for the month of October, which is a little bit on the positive side here. So we look forward to see what the actual data is going to be like. Now, besides all this, we have a handful of speeches coming up from representative of the Federal Reserve. So we have the Jefferson speech, which is coming up in about 2 hours. We have Goolsbee, which we'll be talking much more later in the day, Bostic, Harker, and Logan too as well. So these are events that we also want to be taken into consideration. And of course, we know that the anticipation of these events alone has a tendency of influencing the market sentiment, which in the long run will dovetail to price action movement. Now, talking about price action, the first asset we are going to be taking on today is going to be the US Oil Spot. And on the US Oil Spot, we have a delicate situation going on right now in this current market structure based on what we are seeing in the last 24 hours. As you will see, before this retracement, before this bearish momentum we noticing since the early hours of today, oil prices have been gaining some momentum, and I want to consider this as a retracement of the gains after 2 consecutive days of upward movement. Now, this pullback could be attributed to the US-Venezuela deal. Remember, I made mention of this a couple of days, that indicating a potential increase in global crude oil productions. Or we might be seeing this as a short-term corrective move in anticipation of an uptrend scenario. But from a technical standpoint, let's see what is really going on in this market. And in fact, I would love to take us to as far back as the beginning of this week, where we when we made our informed decisions ahead of this week. Now, at the beginning of the week, let me zoom in. At the beginning of the week, we saw here that initially price was confined within a range that was between the $86.60 level and the $85.90 area to emphasize the level of uncertainty that gripped the market at that point in time. And of course, you know how we do this in this community. Whenever price action falls into this kind of range, we do want to be exercising patience and waiting for a signal, which of course will come in form of either a breakout of the resistance line for buying opportunities or the breakdown retest of the support line for selling opportunities. Unfortunately for us, we had a buy position triggered after price action broke out of that resistance line, and in fact we saw price moved about 40 pips before we were taken out of that position in a loss. So we started the week on a not too good situation, but fortunately for us, we were able to recoup the loss we made so far this week and made some profit on top of it. Then we saw price drop down into the downside, and on Monday, if you are part of our live session, I made mention that before we can sell, we need price to come back and retest the structure, which it actually did, and price moved over 80, 90, 100 pips in our favor before this bullish momentum came in. And I can remember I told us all that we should be moving our stop losses so that we can secure that sell position. And one of the major reasons why we needed to secure our positions, sell positions at that point in time, is simply because of the nature of price action around our key level at the $85 area. Now, one thing we observed since the beginning of the week was the fact that sellers were finding it difficult to break through that zone. And because of this persistent selling pressure, it reveals the presence of buyers around that area. And with that situation there, we were beginning to consider buying the US All Spot as at Tuesday's extra and speed live session. And one of the parameters we used to guide our trading decision was the potential reversal pattern that was gradually unfolding here. So we used the $85.90 level as the neckline of that reversal pattern. So we were looking forward to price breaking out of that structure to give us an opportunity to buy. And lo and behold, that was exactly what happened during the later part of the New York session on Tuesday, as we had our second buy position for the week triggered. And in fact, we saw how price moved significantly well in our favor, over 240 pips on that first move. And remember that we also had the privilege of adding more positions at the breakout of the $86.60 level, which also moved over 100 pips in our favor. So as at the second day stroke third day of the week, we were able to scoop in some significant amounts of profit on this one. And for those who took advantage of that opportunity, well done and kudos to you for being on standby to capitalize on that move. Now, during our live session yesterday, we already saw price break out of the $87.50 level when I told us all to move our stop losses into that area. And of course, we were taken out of that position as we saw selling pressure come in this market. Now, there is one thing we begin to observe here since yesterday's trading session is the fact that price action had continued to find lower highs here, giving us signs that sellers are gradually building up some momentum behind the scenes. Now, coupled with the descending trend line here, remember that we had an ascending trend line, which of course was supporting our bullish idea at the beginning of the week. Now, look at what happened here a couple of hours ago as we finally saw price breakdown of that ascending trend line to incite a potential bearish sentiment in this market. Now, the question going into the New York session today is, will price continue to drop to the downside, or will this be a retracement phase where we shall be waiting to see how far it will go to get ready for another uptrend move. Now, before we go into the details on what our expectations will be like for today, I would like to share with you what things are looking like on the higher time frame so that we can all have a better and holistic perspective into what is going on here. And of course, for those who missed out on our earlier session, you will have the privilege of being on the same page with us. Now, the first thing we did at the beginning of this week was to take into consideration the nature of price action since the beginning of this month. And when we looked at the structure on the 4 hours time frame, it was quite clear that price was bearish. Since the beginning of the month, we connected a series of lower highs, which gave us this descending trend line you can see on your screen right now. And one interesting thing happened here last week when we saw price broke out of that descending trend line, and you know how we use our descending trend line, especially when price breaks out of that structure, then we want to be getting ready to buy. Now, we saw what happened here last week trading session. We saw the breakout, price transition into a consolidation phase, and technically it went back into the trend line to retest it a couple of times, hereby transitioning into another opportunity to join an uptrend move. Now, in addition to this observation, we buttressed at the beginning of the week was the fact that we also had the emergence of a robust reversal pattern in the form of a double bottom structure. In fact, we had two double bottom structures within the structure. Now, let's take a visual representation of what we talked about here at the beginning of the week. So we saw this impulsive move push price all the way into the $81 level, and we saw that despite the strong bearish momentum in this market, we saw how sellers struggled as soon as price tested the $81 area, and the inability of sellers to break through the $81 level was quite a sign that we might likely be seeing a reversal move. Now, see what happened here. The next attempt was here. Price was unable to break the previous low, hereby leading into a higher low. And when we notice higher lows on our chart, we know that buyers are gradually gaining momentum behind the scenes, and of course this transitioned into what looked like a double bottom structure. And of course, you know how we do it. Whenever we identify this potential in the market, next thing we do is to mark out the neckline of that reversal pattern, and here we go. We had this $85 level, which happened to be our key level for this week. And you know how we use our key levels in this community. As long as price remains above the key level, we continue to look out for patterns and structures that supports the idea of buying that asset. Now, last week Friday, we saw price break out of the $85 area, and technically we expect at some point price will come back to retest the structure, which actually happened at the beginning of this week, and the continued buy pressure further gave us the confidence to join an uptrend move. Now, in the last 1, 2, 3, 4, 5, in the last 36 hours or so, we can see our price has retraced back into, gradually approaching back into that $85 area, which happens to be our key level. So now the question going into the new week, to New York session today, is how far will this retracement phase go? How are we going to be witnessing a situation that will incite a sell-off, especially considering the recent development as regards to the US-Venezuela deal, which is ongoing right now, where the US is planning to drop some sanctions so that Venezuela can put their oil into the global market, hereby increasing the supply in the market. And of course, you know that when there is an increase in supply, there is chances that price may crash to the downside. And if this is going to be taken into consideration, we might likely be seeing price break down the $85 level, maybe to incite a strong sell-off to the downside. So at this point in time, we want to wait and remain patient to see how far will this retracement phase go. Now, if it runs in such a way that we see price drop below the $85 area, then we might likely be seeing a sell-off in this market. Now, with the information we have gathered here, one more thing I would like to do here is to acknowledge the higher lows we have noticed in this market since the second week of this month. Now, if we bring out our line chart, you will see that we and connect the series of higher lows, I think we should be having a couple of trend lines to work with going forward. Now, this is the first one right here. Let me give it a blue color. Then we have the second one right here, which I will make it a little bit thicker to emphasize the major ascending trend line here. So we bring back our candle chart and let's readjust those structures so that it can capture all the pivot lows we have here. So now going into today's trading session, we have a couple of ascending trend line which we shall be using to guide our trading decisions for today's trading session. Now you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in a buy position. So at this point in time, price appeared to be testing the first one right here. So let's see if it's going to drop further into this area. But most importantly, what we are going to be looking out for around that $85.90 level and the $85 area is to see some reversal setup, something like a double bottom structure or a head and shoulder pattern for us to feel comfortable of joining an uptrend move. So we are at a very crucial juncture in this market. We are depending on how participants in the market react to this price zone will determine what our next line of action will be. So if we can see reversal patterns here like buy pressure and that sellers are finding it difficult to break down the ascending trend line, then we want to be anticipating an uptrend situation. However, if price goes on to break down that zone, breaking down that ascending trend line, well, this will be the first time price will be breaking down that trend line in the last couple of weeks to give us a signal that we are likely going bearish. And in fact, I would love to see some retracement or retest of structure to further confirm that sellers are getting stronger here. So with the information we have gathered here and for the fact that we have a crucial zone around that $85.90 level and the $85 area, you would agree with me that we're at a crucial point and we need to be very, very patient at this juncture to wait for a significant signal to give us an opportunity to trade. Now, with the information we have gathered here, let's scale down into the 1 hour time frame to see how we are going to be positioning ourselves for this week, for today's trading session, sorry. So scaling down, okay, I want to ensure that these trend lines are visible on our lower time frame. So let me just include them into the visibilities. All right, so let's scale back down into the 1 hour time frame. Now on the 1 hour time frame, this ascending trend line here is going to be playing a major role in guiding our trading decisions for today. So I would like to delete all these ones as they are no longer relevant based on this current structure we have right now. So the fact that price still remains above the ascending trend line, so let's zoom in and let's see what is going on here. So you will see that in the last 3 hours, price tested that ascending trend line and we begin to notice the emergence of buy pressure around this area. Now the question here is, we are not jumping right in like that to sell, to buy rather, as we will need to see some transition into a formidable trading setup like double bottom structures, head and shoulder patterns, or even falling wedge to give us the confidence of joining an uptrend situation here. Now, in addition to this observation is the lower highs that has gripped this market since yesterday morning. As you will see, price has found lower highs, so I have a descending trend line here to guide our trading decision for today. Now that we have all this information in, how do we intend to position ourselves? Well, to buy the US All Spot today, I want to see something like a double bottom structure, a reversal pattern, and most importantly, this descending trend line gets broken to the upside. Then at this point, I want to start considering buying. And if price continues to climb new highs, then the breakout of the $87.50 area, the $88.50 level, and of course the $89.30 area are all important structures that we will be using to maximize the potential of that bullish move. So this is how we are going to be buying the US All Spot today. Importantly, I want to see price slice through this descending trend line, hereby negating the idea that this trend line is too strong enough to push price to the downside. Now, in as much as we still hold on to the bullish perspective in this market, we cannot ignore the potentials of sellers. You know how we do it in this community. We also want to keep in mind that sellers could still push price to the downside. And in fact, if we take into consideration the nature of this engulfing bearish candle that gripped this market about 4 to 5 hours ago, it's a sign that there could be some momentum build up behind the scenes in favor of the sellers. And with a descending trend line here, this trend line here is going to be playing a major role to determine if we are going to be going further down or breaking out of that structure to push price upside. So if the buy pressure here persists, that is, this pressure persists, we might likely see a situation where price retraces back into the trend line or the $86.60 level, and if buyers find it difficult to break through the trend line, we might likely see a sell-off to the downside. Now, if price drops further down, the $85 area, which interestingly shares a confluence with that ascending trend line we spotted on the higher time frame, will be a crucial moment where we want to move all stop losses on the sell position, secure the position while we wait and see how the market participant would react to that price level. Now, if a breakdown of this structure happens to the downside, then we will be getting ready to add more sell position. But if buy pressure resumes above, then price it may likely be respecting that ascending trend line one more time to push price to the upside. So this is my view here on the US All Spot, and you will be able to see how this descending trend line and that ascending trend line here is going to be playing a major role in determining the direction of price action today. So we do want to be marking out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So I don't know if you have any questions. If you do, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So in the absence of no questions, I want to take this as a confirmation that we are good to go this morning. So in that regard, we shall be moving on to the next asset on our watch list. All right, so the next asset on our watch list for today is the USTech 100, which is popularly known as the NASDAQ. Now, on the NASDAQ, we have a sell position running right now, which falls in line with our expectations yesterday, remember? So I would like us to go through how the week started for us in this community, what led to the decisions we made. Remember, we were selling at the beginning of the week before we started observing the rate at which the lower highs in the market further emphasize the build-up of momentum towards the downside. So at the beginning of the week, it was more of a consolidation phase. As you will see, price was confined within this range between the $15,065 level and the $14,980 area, which emphasized the level of uncertainty at that particular point in time. And in addition to that was this continued buy pressure we noticed around that $15,000 level and the 14,980 zone at the beginning of the week, which gave us an insight into a potential uptrend move. And if we look at it from a technical perspective, we can see that we had something like a reversal pattern in the form of a double bottom structure. And these were the conditions we saw here on Monday, which buttresses the fact that we will be looking out for buying opportunities. And of course, we had our buy position triggered at the breakout of that neckline, which happens to be the resistance line of that channel, as we rode the move all the way into that 15,200 area, giving us about 150 pips before the bearish momentum came in to take us out of that position. Now, for about 2 days, I think Monday, Tuesday, and a little bit of yesterday, we begin to notice the buildup of bearish momentum in this market. And that led to the observation of this descending trend line after we connected the series of lower highs. And one thing we agreed here is that as long as price remains below that descending trend line, we want to feel comfortable selling the USTech 100. And mind you, we saw here during our live session yesterday that price had already broken down the $15,065 level. And I made mention here yesterday that for those of us who had missed out on this opportunity, that let us wait for price to come back, retest the structure before we want to be joining the downtrend move. And this was exactly what happened. As you will see, a couple of hours into the New York session, we saw our price came back to do a multiple retest of that zone around the 15,065 level to push price to the downside. And remember that we also had another level around the $15,000 area and the 14,980, where we said we will be using the breakdown retest of that structure to maximize the bearish momentum. And as you will see, price continue to ride all the way to the downside, giving us about moving about, let's see how many pips from the first position here, moved over 200 pips in our direction. And of course, the second position here moved over 150 pips in our favor before this buy pressure resumed again in this market. And personally, I have been taken out of this position, but for those of us who are still currently having the sell position running, then I will advise you to move your stop losses and secure this position around the second and third entry area between the $15,000 and the 14,980 area seems most appropriate to move all stop losses to, based on the structure we have around that area. Now, with a well secured position at this juncture, what is going to be our next line of action? How do we intend to capitalize on more trading opportunities around this area? Now, the first and first here is that $15,000 area, a very strong psychological area, which was finally broken during the New York session yesterday. Remember that zone had previously been serving as a strong buy niche before it was finally broken yesterday. Now, this is a very significant development in this market. Now, the question going into today's New York session is the bullish momentum we're noticing so far may likely, will it be a retracement of that impulsive move where we might likely see price retrace back into that zone, that is the $15,000 zone, where it also shares a confluence with that descending trend line to incite a downtrend scenario. Now, this is one of the perspectives we are going to be looking at today. But before we go further in, I want us to do some revisit of the higher time frame so that we can correlate what we are seeing here with what we have on the higher time frame and confirm if truly we are going to be looking forward to a downtrend continuation, or we might likely be seeing a breakout of that trend line to incite an uptrend move. Now, scaling up into the 4 hours time frame, I would like to show you what we saw here at the beginning of the week. Now, remember last week we saw this beautiful reversal pattern in the form of a double bottom structure, as you will see here, where the neckline of that reversal pattern falls exactly along that key level at the 14,850. Now, from a technical standpoint, what validates that reversal pattern is the breakout of the neckline. Now, look at what we have here. We saw the breakout of the neckline happen last week Friday. Price climbed up into this area, and from a technical standpoint, we expect that some point in time price may retrace back into the neckline to incite an uptrend continuation. Now, if you look at what has been going on at this area in the last 3-5 hours now, you see that price dropped back into the neckline at the 14,850. We saw buy pressure resume around that area to incite an uptrend situation. Now, will this be the retracement into the neckline to incite the uptrend move? Well, let's remain patient here, and the 14,850 level here is going to be playing a major role in determining how we are going to be trading for today. So if price remains above the 14,850 and we continue to see signs that buyers are building up momentum like higher highs and higher lows, or double bottom structures, head and shoulder patterns above the 14,850, we shall feel comfortable in a bullish position, and we look out for more buying opportunities. But if at any point in time today price breaks down the 14,850, then at this point in time I want to start considering selling or adding more position to my existing sell position. Remember, we said we should move our stop losses on the previous sell position. So let's see if the market will probably retrace back into the $15,000 area to incite a sell-off, or will it break out of the $15,000 area to incite an uptrend situation. Now, I just needed us to see what things are looking like on the 4 hours time frame. So with the information we have gathered here, let's scale back down into the 1 hour time frame. Now, on the 1 hour time frame, this is what we are going to be looking at. Now, we have this area here. We've been seeing buy pressure here in the last 3 to 4 hours. So let's see how the market will retrace to this area. Is it going to get this far? And if it does get that far, how will it react to this zone? Now, remember that that $15,000 area also lines up with this descending trend line. So let's see how price is going to react to the structure. If we begin to see selling pressure here, we might be in for a sell position, while the breakdown of the 14,850 will be welcoming more sell position. However, if price action breaks out of the $15,000 area and that descending trend line, then we want to be getting ready to buy. Now, remember that we are not going to be getting too excited here, neither are we going to be having a buy stop order above that structure, as we will want to wait for some confirmations to happen before we jump into that buy position. Remember, a breakout of that trend line could still turn out to be a false breakout. So we will need it to be a true one, and this would reflect on the chart as price retracing back into structure, after which we do want to be joining the uptrend move. So you can see how the $15,000 area and of course this descending trend line is going to be playing a major role in determining how we are going to be trading for today. In fact, I want to readjust this trend line here so that it can suit the current structure. Okay, so we have it right here. So let me extend it out a little further so that so this is how you would like to have it on your chart right now. So let's see how the market will play out. How far will this bullish momentum go? If it goes on to break out of the trend line, then we get ready to buy. And if price finds it difficult to break out of the trend line, then it's a sign that sellers are still very strong and we want to be part of a bearish move. So these are my views on the US Tech 100. So let's see how the market will play out going forward, and just allow your structures to mature so that we can be part of this opportunity. So let's see if you have any questions. I'll look into the comment section to see if you have any questions. I'll be taking the next 10 to 15 seconds, and you can also use that time to mark out these levels on your chart. All right, so let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, which is popularly known as the cable market, of course. And interestingly, in the last 24 hours, we've been selling the GBPUSD after price broke out of that ascending trend line we spotted here yesterday's trading session. Now, the pound sterling is currently facing a downward pressure. As you will see, in the last 24-36 hours, we have been noticing lower lows and lower highs, and in fact, price action is trading below the 1.2150 zone. And from the look of things, the US dollar appears to be gaining safe haven appeal due to the increasing tension in the Middle East, which is adversely affecting these assets we are looking at right now. And one thing here is that investors are closely watching or anticipating any update from the Fed Chairman Powell's upcoming speech today, which will be giving us some insight into the monetary policy of the Federal Reserve and, of course, the economic outlook of the United States economy. Now, from a technical standpoint, what has really been going on in this market since the past 1 week? Now, from this structure here in the 1 hour time frame, it is quite clear that prior to this morning, or prior to the later part of yesterday's trading session, we saw that price had been confined within a range that is between the 1.22200 level and the 1.21250 area, which further emphasize the level of indecision at this point in time. And of course, you know how we do it whenever we have this kind of indecisive phase where price action falls into a range. We want to exercise patience and waiting for the breakout or breakdown of that range to give us a signal to work with. However, within that range, we were able to spot an ascending trend line after connecting the series of higher lows, which gave us the sense of idea that we might be buying and that we might likely be seeing a breakout of the 1.22200 area. Now, this ascending trend line here has been supporting our bullish bias since the beginning of the week. But one thing we observed here is that despite the fact we're buying, price kept on coming back into our entry zone, taking us out of that position at every point in time. And during our live session yesterday, I emphasized that as long as price remains above the ascending trend line, we shall continue to maintain a bullish bias. But if we are going to be buying yesterday, I mentioned, if you remember, I said we will need price to break out of the 1.22200 area, taking out all the sell positions here before we can start considering buying. And of course, in the last 24 hours, this never happened. Now, when we saw the situation here, we also emphasized that because of the lower highs we're noticing here in the last 2 to 3 days, we might likely be seeing a breakdown of that descending trend line. And this was exactly what happened a couple of hours into the New York session. We saw price break down the ascending trend line for the first time, and in fact it came back to retest the structure, giving us a beautiful opportunity to join the downtrend move. And since that breakdown happened, we have been selling. And remember, I mentioned here yesterday that we are going to be using the breakdown retest of these levels at the 1.21375, and of course that key level at the 1.21250 to add more sell positions to our existing trade. So since yesterday we have been selling, so we have the first sell position currently running with about 45 pips in profit, second position running with about 25 pips in profit, and then we have the third position running with about 7 pips in profit. So we have roughly about 80 to 90 pips at this point in time. And with the way things are going right now, it is very, very important that we move all our stop losses and secure these current sell positions while we look out for new trading opportunities in this market. And if we look at the way things are going here, I will be suggesting that anywhere between the 1.21375 and the 1.21250 area seems most appropriate to lock in this profit. And please note that we always want to give enough room while we are securing our position for price action to breathe, just in case we could see some retracement into structure before the downtrend continuation happens, so that we can still be in the trade when this happens. So with all this information we have gathered here and a well secured position, what is going to be our next line of action for today's trading session? Well, this morning while I was trying to dissect the current market structure, I was able to spot this descending trend lines after connecting the series of lower highs here. So in fact, I have a couple of them here. So we have the first major trend line, and of course we have the second one right here, where if price continue to stay below this trend line, we shall feel comfortable in our sell position. However, if price breaks out of this trend line, we might be back into the idea that we will be going bullish again one more time. But the way things are going right now, the pound sterling is very, very weak, and I think we're still looking forward to some data today on the pound sterling. I think we still have some data here. Let me look at the economic calendar. Okay, we have the GFK consumer confidence, which is coming up much more later in the day, and this is a high level of consumer confidence which stimulates economic expansion, while a low level drive to economic downturn. So we want to look forward to see what this is going to be doing, and we don't know how the market will be anticipating this event. But one thing for sure here, based from a technical standpoint, this descending trend line here is going to be playing a major role in guiding our trading decisions for today. So let's mark this trend line out on our chart, and let's remain bearish if price remains below this descending trend lines, and if it breaks out, then we get ready to buy. So we remain bearish on the GBPUSD today. Then we also have another level here at the 1.20900 area, which we do want to be marking out on our charts. A further breakdown of this level will be welcoming more selling positions. So 1.20900 level, as you will see here, place it at the bottom, and here we go. So let's see if price will continue to break down the structure. If it does break down, we do want to be adding more sell position. So these are my views on the GBPUSD. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I'm running out of time. So, let's take on the last asset on our watch list for today's trading session. So the next asset on our watch list is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And in fact, we've been doing very, very well since the beginning of the week. And in fact, I will consider the XAUUSD as one of the most profitable assets on our watch list for this week, as if you still have all your buy positions running right now, you will currently be in over 600 pips in profit from 1, 2, 3, 4, 5, 6, 7 positions running at this point in time. So let's run through how the week started and what led to the idea of us buying the XAUUSD. Now remember that well, the gold price surged on Wednesday very, very significantly, reaching the highest level since the early days of the month of August, around the 1960-ish. And for me personally, I will consider this to be driven by the escalating tension in the Middle East. And of course, we know we had hawkish Fed expectations, rising US bond yields, and a stronger US dollar. And well, this new development, the hawkish Fed expectation, rising US bond yields, and the strong US dollar may likely cap this bullish momentum. So we need to be very, very careful, as we are at a very crucial moment in the market right now. Even the fact that we're anticipating the first chairman's speech today may likely throw a clog in the wheel of this bullish momentum that we are currently witnessing at this point. Now, let's run through the technical aspect of this market and see how we are going to be managing this position for this week, for today's trading session. So at the beginning of the week, we saw it was more of a selling expectation. Remember, the week started on a bearish note, and in fact, we were thinking that price was going to be dropping to as far as this area in anticipation of an uptrend scenario, but that never happened, as we saw how that zone around the 1915 area continue to negate all attempt by the sellers to break through that area, and this resulted in a build-up of bullish momentum, as you will see here. Then, in addition to this temporary demand zone, was the fact that we saw the emergence of an uptrend continuation pattern in the form of, we can call it a symmetrical triangle or a pennant, depending on your own perspective. So we saw this impulsive move right here. Price transitioned into the structure, which looks more like a pennant to me, but a lot of people are calling it a triangle. And whenever we see this kind of situation here, we expect that a breakout of the resistance line of this pattern will be welcoming buying opportunities. And of course, yesterday we talked about this. We said price breaking out of the structure will be welcoming more opportunities. And for those who missed out on this breakout of the 1918, then we can be on standby to capitalize the 1923 area, $1,927.50 area, the 1930. These are very important levels we marked out earlier yesterday to capitalize on more trading opportunity in this market. So it was quite a very interesting 48 hours for us all in this community on the XAUUSD, and well done and kudos to everyone who has been part of this profitable journey. Now, with the situation we have right now, if you still have your buy positions running, that if you held on to this buy position till this present moment, you do want to be moving your stop losses right now and securing the current positions at this juncture. Now, the most appropriate area to move all stop losses to will be anywhere below the 1946, as of course we do want to be giving enough room for price action to breathe. Now, with a well secured position at this juncture, what is going to be our next line of action today? What are the potentials of the buyers, or are there any possibilities that sellers could come in at any point in time? Well, while trying to dissect the current market structure this morning, the first thing I was able to observe is that after price action found new high, we begin to notice some choppy situation go on here, which is something that is not supposed to be surprising at all, as we all know that when price finds a new high, it takes quite a while before price acclimatized to this new zone that it has found. And when price finds a new high like this, we usually see these emotions of fear come in, as majority will start closing in some of their positions to take some profit off the market because of the potential of a crash from this area. And because of this, we saw this spike in trading activities, resulting into price action confined within this 1958 and the 1946 zone. Now, if we consider the strength of the buyers here, you will see that this area around the 1946 level had continued to be a buy zone since yesterday's New York session. As you will see, sellers have been finding it difficult to break through this 1946 despite the lower highs that was witnessed here. Now, with this situation here, you will see that in the last 4 to 5 hours, price action had broken out of that descending trend line, and which for me is a sign that we might likely be seeing price continue to the upside. And as a result of these expectations, it makes quite a lot of sense to have a buy stop order above the $1,951.50 level with a stop loss around this area, which will be dovetailing to about 50 pips to capitalize on the uptrend continuation. Now, there are two ways to which you can capitalize on this. Remember, for those who are part of this profitable journey since the beginning of the week, you can afford to leverage on some of the profit you have made so far this week to capitalize on that breakout of the $1,951.50 level. Now, if a breakout happens and it doesn't work, we know that we are just risking some of the profit we already made. However, if you are new with us and this is your first time taking a position on the XAUUSD, I will encourage you to exercise patience, wait for a retest of structure before jumping into that position. And if price continues to climb new highs, we have the 1958 level where we can also add more buy positions here. And then we also have this level here, which happens to be the highest point price action has been for this week. Let's call it the 1963 level. So if price continues to climb new highs, breaking out of this 1963, we will be looking forward to adding more buy position. So the current market structure here is still looking very, very bullish. However, there is still a possibility that price could break down the 1946. Now, if it breaks down the 1946, it doesn't mean that we are in for a bearish long-term bearish momentum. Remember, we had this major ascending trend line, which of course has been supporting the bullish momentum since the beginning of the week. So if price drops below the 1946, we might likely be seeing a situation where price drops back into this ascending trend line to incite an uptrend continuation. And in fact, if it gets broken to the downside, we might likely be seeing a huge sell-off from this area. So if price drops below the 1946, that is this level here, which I mentioned earlier as being a strong buying niche in this market, I would like to see a retest of structure for confirmation for this counter trend opportunity, which has a potential of dovetailing to a minimum of 150 pips to catch there. So if price drops below the 1946, retest structure on our lower time frame, then that could welcome some selling opportunities. And please note that this is a counter trend opportunity, and that if you are taking this position, you do want to be on standby to always move your stop losses accordingly to secure your position as price moves in your favor. So these are my views here on the XAUUSD. So our center of focus for today is basically between the $1,951.50 level and the $1,946 area, where depending on the direction of the breakout, we will be determining where our next line of action will be and where price is likely going for today. So these are my views on the XAUUSD. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 second half to see if there are any questions, after which I will be coming back to do a round off on the Extra and Speed live session for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in fact, it has been a wonderful moment with you guys today. I really enjoyed every single bit of it, and I hope you did too, as well, as we were able to take on 4 major assets today, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spots, and all of which we were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the market and strategically position ourselves ahead of the New York session today. So well done, guys. Let's allow our structures to mature. I do hope you are able to mark out these levels on your chart. Exercise patience. Let's allow the structures to mature before we jump into any positions here. So for those who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I look forward to seeing more of you tomorrow on our subsequent editions, as the more time you spend with us, the better you get to understand how the strategy works and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, you are welcome on board, and in fact, I look forward to seeing you guys again tomorrow morning, same time, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing in the next 24 hours, and of course get ready for the last trading day of the week, which promises to be another exciting episode. So on this note, I wish us all the best of luck and do have a wonderful evening out there. Bye bye.